This presentation is intended to help individuals understand income tax concepts using a uniquely created big picture of income tax. It is not intended as reference for filing your tax return. It is designed to show how the various tax components fit together, and their general effect on your final tax liability when you file your tax return. Also added are a few easier to understand charts on tax basics. Before we start on the integrated big picture of tax, let us quickly view the very basic tax return process. We start at the top, with a taxpayer reporting gross income from his job, and all other sources. During the year, you would have paid taxes on your income, in two ways. If you were employed, then your employer withheld tax from your pay, and sent it to the tax office. If the income was from other sources where tax was not withheld by the payer, then you may have made for PAYG or estimated tax payments to the tax office during the year. To start the income tax calculations, you first reduce your gross income by the allowed work-related expenses, called deductions. The remaining income balance becomes your taxable income for the year. The next step is to calculate tax on this taxable income using the applicable tax brackets and tax rates. The taxable income is first reduced by any non-refundable offsets you can claim. The tax is then increased by the amount you need to pay towards Medicare and payback for help education. The balance is then reduced by the tax withheld or tax you have already paid during the year. This is further reduced by an refundable tax you may be eligible for. The final balance may be a refund or notice for payment. In this illustration, the tax calculations have resulted in a refund. This screen was specially designed by the author to help you grasp the big picture on tax in a single view. Take your time to absorb the essentials of this screen, as you should be able to relate almost everything you read on personal tax to this screen. On the top in orange you see the three different forms of income. The taxed at source income like salary is on the left, and in the middle is the not taxed at source income like rental income, and on the right is capital gains income from sale of shares or property. And just below the incomes, in green color, you see employer withheld tax from your salary, and if you had not taxed at source type income, then maybe PAYG installment tax paid during the year. These will be adjusted at end of year in the tax return calculations. When you lodge your tax return, your income from all sources are combined. This total income is then reduced by any eligible deductions to arrive at your taxable income. In red color you see the tax rates, and above it the tax brackets used to calculate your taxable income. Next, on the bottom left you can see the tax on tax payable is first reduced by non-refundable offsets like spouse offset, then it is increased by tax liabilities like Medicare levy and HEC's repayment, then reduced again by tax payments during the year like employer withheld tax and maybe PAYG installments. The result is further reduced by any refundable tax offsets like private health insurance. The final balance may be a refund or a tax debt, as in the notice of assessment issued to you.
This chart indicates the type of car travel you may incur in a working day. While you cannot claim travel from home to your normal workplace and back as shown in the red line, you can claim all the actual job-related travel as indicated by the broader green lines such as going to a customer site or a branch office or a work seminar location. And if your normal daily pattern is shifting places of work or traveling daily to multiple work locations, then you can claim travel between home and an alternative workplace or from the alternative workplace to home. For deduction D4, as shown at the bottom right of the screen, you can claim both ways if traveling from your home to a place of self-education and back to home, but otherwise claim only the first leg of the journey to a place of self-education. Please press the pause button if you want to spend more time to review the screen.
A tax file number declaration is required when you start any new job. It is used by the employer to withhold the proper amount of income tax from your paycheck. In some cases you may also need to complete a withholding declaration. For ongoing employees, one should submit a withholding declaration if the original information provided to employer needs to be altered due to a change in personal situation. In the TFN declaration, you provide your tax file number, correct name, address and date of birth. You also provide some other data that helps to withhold correct amount of tax. Your employer forwards the tax withheld to the tax office. In July every year, you will receive a consolidated payment summary of tax withheld for the year, which you use to lodge your tax return. The tax withheld in your statement will be adjusted against the income tax calculated in tax return. In this view we see the tax rates and tax brackets for tax year starting July 2014. In the tax bracket column we see the 5 groups of income ranges. In the tax rate column we see the tax rates that will apply to the portion of income that falls within each income bracket. On the right side we see the calculation for tax payable. Tax is calculated by multiplying each tax rate by the amount of your income that falls within each tax bracket. The $17,547 in bracket 4 is the sum of the taxes in the previous brackets, which was 0 in bracket 1, then 3,572 in bracket 2 and 13,975 in bracket 3. At the bottom is the example of a taxpayer whose taxable income equals $70,000. This falls in bracket 3 calculation formulae. His income portion in the third bracket is $70,000 minus $37,000 or equals $33,000. So his tax equals $3,572 plus 32.5% multiplied by $33,000, which is the same as the formula below showing tax calculated for each tax bracket.